Hello everyone, I am Rajni Sahu. I am working as an equity research analyst at Elite Wealth Limited, and today we comes with another video in which we will talk about rising inflation worldwide and its impact on financial markets. Yesterday we saw India's retail inflation surge to 7.79% on an annual basis in the month of April on rising edible and fuel prices. It was the highest level since May 2014. The day before yesterday, the US CPI inflation for the month of April comes at 8.3%, which was higher than the estimates of 8.1%. However, inflation rate is lower than 8.5%, which was peaked in the month of March. Not only US and India, other countries are also witnessing rising inflation. The annual rate of CPI inflation worldwide rose to 9.2% in the month of March from 7.5% in the month of February 2022. The surge in inflation is driven by high energy and food prices, especially since the start of the war in Ukraine on February 24, 2022. As we know, higher inflation rate comes with higher interest rate also. Recently, US Federal Reserve increased its interest rate from 0.5% to 1%. Bank of England also increased its interest rate from 0.75% to 1% as UK inflation rose to 7% in the month of April. In India, Reserve Bank of India also increased its repo rate from 4% to 4.4% and as higher inflation rate was expected in the month of April. Higher inflation rate will keep the pressure on US Federal Reserve to carry on with the program of half percentage point interest rate rises through the course of 2022. With the expectation of rising interest rate in US, FIs are shifting money from emerging markets to developed markets. In 2022, foreign investors have pulled out 1.5 lakh crore from Indian markets including equity, debt and mutual funds. The rupee is trading at 77.36 against dollar after hitting a record low of 77.5 as the dollar strengthened after US Federal Reserve raised interest rates. The other countries are also weakening against US dollar. The US dollar index, not only Indian rupee, the other currencies are also weakening against dollar. The US dollar index, which tracks dollar against 6 other important currency, is trading at 104, which it hadn't reached in 20 years. As you can see in chart, foreign exchange reserves of India, which had been rising in past, peaked in September at $642 billion. The foreign reserves, which have been on decline since foreign investors started pulling out money from India over the concerns of higher global inflation. Higher cost of imports due to a spike in commodity prices also depleting reserves of India. On 6th May 2022, India's foreign reserves stood at $598 billion. Again, yields on 10-year government bonds trading at 7.5% up from 6.8% in March 2020. It surged more after RBI increased repo rate by 40 basis points. Oil prices are also heating up. Brent crude oil is trading between $100 to $110 barrel in recent weeks. Rising inflation and interest rates brings the sharp correction in global indices. Recently, S&P 500 ended below 4,000 while Nasdaq closed its lowest level since November 2020. Nifty is down 11.5% from its April level of 18,000. As RBI hiked repo rate over the concerns of rising inflation rate. Long-term investors know that equity market do not move in one direction. There are up and downs, corrections and also market crashes. However, history shows equity move upwards in the long term. So we advise investors to accumulate quality stocks at these lower valuations. Thanks for watching our video. If you like this video, please hit the like button and subscribe to our YouTube channel. If you have any query, do comment.